The big tech stock run-up continues, and NASDAQ is having its best move in 4 years. But some on Wall Street are still nervous about a recession. Holly Newman Kroft tells us why next on Quartz Smart Investing. Thank you for joining us. I'm Merrill Brown. Our guest today is Holly Newman Kroft with Neuberger Berman Private Wealth. Nice having you with us, Holly.
Thanks for having me, Merrill.
A pleasure. So even with the tech run-up and even with all the tech talk about AI, you're worried about a recession and what's ahead for the rest of the year. What's the rest of 2023 look like?
I think the rest of 2023, we're going to have a pullback in the market. AI and tech aren't the whole economy, and they can't drive the whole market, although they've done a pretty good job year to date. You know, the FAMG stocks through mid-June are responsible for about 60% of the market performance. But if you strip those out and you look at the equal rated return of the S&P, it's only 5% versus 15% with including those stocks in. And our thought is the market tends to react and then think later. So there's a lot of excitement about tech and AI and what's going on and if it's going to take over the world. But there will be a rationalization in our opinion, and we think the market will pull back the second half of this year.
So what do you think about AI underlying it? Is this the internet circa 1996, or is this something we'll be thinking about differently in a year?
I think AI has been around for a while, and it's certainly here to stay, and it's going to revolutionize some industries, and it's going to make other industries seem smarter and better. But I worry what we're experiencing now might be a little bit like the crypto phase and remember the internet boom and then bust. So it's got to be slow, steady, and thoughtful. And I don't think we've reached the thoughtful stage yet of the progression and the growth.
And which tier of stocks are most vulnerable to this pullback later this year?
Well, there's 5 mega caps that are responsible for a lot of this growth. Small caps have outperformed significantly versus the rest of the market. And we think generally there are a lot of areas that are holding this market up. It's not only AI and those few securities that are benefiting from that, but you know, there's the consumers and corporations still have pretty strong balance sheets. That's left over from the pandemic. That's dwindling. The labor market is amazingly strong, and that has held our market up. I think companies have taken advantage of inflation, and they've been able to maintain their profit margins now that supply chain issues have resolved. So there are a lot of areas that we can identify for the growth in the market, not only AI.
How deep and meaningful is the recession that lies ahead, and what are the implications of it for the economy?
You know, Merrill, I think the first question that we have to ask ourselves with the recession is, when is said recession going to happen? There certainly seems to be consensus, that there will be a recession. Some economists are forecasting it in the second half of this year. We think that it's going to happen in the first half of next year. There's been so much resiliency in our market, and so we think that that's going to push the recession out till next year. We're hopeful that a strong labor market and some other positive factors, which I mentioned, will keep the recession somewhat shallow. But there's going to be a lot of volatility, we think, through the end of 2024. There's been tremendous uncertainty this year with the Fed and the rates and inflation. And even as we get to the other side of that and have more clarity on rates staying higher for longer, which we believe they will inflation hit 2%? We think it will, but again, we don't think that's going to happen till the end of next year. We're going to have clarity on some of these underlying issues, but then we start 2024 and we're in an election year. And election years, in the best of circumstances, always bring about a lot of volatility. And we would argue that this is not the best of circumstances.
What are the chances that the recession is truly deep and meaningful?
We don't see that happening unless there's something unforeseen. And there are a lot of unknowns in the market. And that's why our portfolios have been positioned quite defensively for a couple of years now. There's so much uncertainty around rates, inflation, and then the upcoming election. So we're overweight fixed income. We're overweight alternatives. We are underweight traditional equities, and we're happy with these interest rates that we're really being paid to sit on the sidelines and wait and see, being able to wait and see what's going to happen.
In your daily life, you're generally advising large enterprises about what to do with their funds. What is your advice for consumers in terms of categories and asset classes they should be looking at?
So my clients are mostly ultra high net worth individuals, endowments, and foundations. And we're underweight equities in general. We are overweight alternatives. We specifically like private equity and private debt if you can afford the illiquidity. But the beauty of that market today is there are so many ways to access the alternative asset class, even if you can't afford the illiquidity. And in fixed income, we're continuing to stay pretty short and pretty conservative in our fixed income allocation.
As a class, and without talking about specific stocks, do you recommend that consumers perhaps sell their technology holdings right now, and this is a good moment to do that?
You know, you have to weigh the benefit of the gain against the tax implication of the sale, and then you have to look from a risk perspective of how overweight you are to any one security or asset class in managing the risk in your portfolio. So there are a lot of considerations that are so specific to every client.
But you're advising prudence at the moment.
Absolutely.
Thank you, Holly. Great having you.
Thanks, Merrill.
For more of today's top business news, as well as timely analysis, stay with QZ.com.